The Chinese property sector is likely facing a period of stagnation that could heavily impact the global economy. The real estate sector accounts for around 29% of China's GDP and includes housing investment, services, along with other inputs like commodities and consumer durables. And at the center of the problem is the unsustainable property sector debt. The whole world knows about Evergrande and its tribulations, but the firm is not a one-off, and many other real estate businesses are experiencing similar troubles. The Hong Kong-listed shares of Chinese real estate developer Kaisa Group Holdings were halted on Friday after news that it had missed a debt payment. The boom in the Chinese real estate market has been in part driven and underwritten by the government in Beijing. However, where it had been willing to step in and provide stability in the past, the stakes may be a bit too high for the government to do so as comprehensively as required this time around. That said, support is expected, but the main fear is that the market faces years of stagnation. And on Monday, the Federal Reserve shared its financial stability report, which contained concerns over the situation in China. The U.S. Central Bank fears that stresses in China's real estate sector could strain the Chinese financial system, with possible spillovers to the U.S. And those fears are centered around the slowdown in Chinese real estate and the impact it is having on heavily indebted developers whose businesses are diversified into other areas of the economy. The fear is that a slowdown in the housing market could lead to unemployment and spread through global trade channels as China cuts its overseas purchases of goods. However, the closed nature of China's financial system should limit contagion fears.